Hello, I'm Richard Murphy, and I've already done one video talking about quantitative easing and why we can now be sure in 2021 that it's not really delivering what we hoped for. It isn't delivering the stimulus that we would like to see in the economy to assist recovery. It is stopping banks failing. It is keeping inflation low, it is keeping government debt low, but it isn't creating new economic activity of any type really at all. And as a result, we know that we're in the economic doldrums. And what we've seen between 2009 and 2020 before coronavirus came along was that QE isn't the way to get us out of those doldrums. So what is it that we have to do to make QE work? Now, back in 2010, working with Colin Hines, an environmentalist and economist who was once at Greenpeace and has since then become the convener of the Green New Deal group, of which I'm a member, I co-authored a paper about something which we called green quantitative easing. Now, various other names have been given to it since. In particular, Jeremy Corbyn used this idea to become leader of the Labour Party. He then called it people's quantitative easing. And by the way, John McDonnell almost immediately abandoned the idea of using it once Jeremy Corbyn got into office. But the idea has been picked up before and has been looked at seriously along the way by various participants. And I believe the time has come for us to revisit that. Now, what green quantitative easing does is something different from conventional QE. I've already explained that conventional QE basically creates money within the Bank of England and Treasury, which is used to buy back government bonds that have already been issued. What green QE does is something a little different from that, because instead of relying upon the financial markets to direct that newly injected money as a result of the repurchase of government bonds, instead of relying upon that to go into constructive activity like investment in new industry, investment in new jobs, investment in new infrastructure, investment in new housing, investment in new hospitals, investment in green activity, investment in the Green New Deal, and so on, which is what many of us want and which is the basis of the new wealth and prosperity that this country desperately needs. Instead, it just said, you do what you want with it. There was a belief that the invisible hand that supposedly guides the market in the right way would on this occasion deliver with 800 billion of funding, and it hasn't. So green quantitative easing does something rather different. What it says is actually savers, and they are of course the people who now hold this money that is being injected by the government into the economy. It's not ordinary people who were supported by the original government spending which creates a deficit, but savers who end up with the cash as a consequence of the re-injection of this money into the economy via QE, they need to be directed towards the right sort of activity to make sure that we get the economic recovery we want. And this is the big twist within Green QE. It says we should not leave it to chance that the money will be put to good use. And so the logic is create a national investment bank. Call it a green investment bank if you like, call it a national investment bank or a national wealth fund if you want. I don't mind which of those things it is, but the effect is always the same. We set up a body to direct the future policy of the country with regard to investment in those things we want. Start with housing to make sure that everybody's got fair access to it. Start with the healthcare facilities that we now know we need. We are under-provided with intensive care units. Start with those things that we need for the green transition, the types of energy production we want, and so on. And then to make sure that the money goes into that activity without asking for further government injection of funds, find ways to redirect that money which has already been sent back into the economy by the government, by re-injecting money, by the purchase of government bonds, into these constructive activities. Treat that savings, which has been created by the QE process, not by the Green QE process, but the QE process, as a pool of money which could become the capital to fund this future investment. And there's no reason why money can't fund investment after all. There is such a thing as financial capital. It doesn't have to be that all capital spending is financed by borrowing, even though over recent decades that's normally been the case. So put that money from saving accounts into the National Investment Bank and use that as the funds for this economic transformation. How do we do that? Well, Colin and I have two very simple examples of ways to do that. What we know, for example, is that £70 billion a year in the UK goes into ISA accounts, individual savings accounts. Absolutely, year in, year out, the figure has been growing slightly, but now 70 billion plus a year. Now, that's a lot of money. Suppose we simply said that ISAs were only available from the National Investment Bank or organisations that were licensed by it to undertake investment activity, which could, of course, be local governments, it could be health trusts, it could be whatever we wished. They would then be able to issue bonds which could be offered to the holders of ISA accounts, and no other option would be available to holders of ISA accounts. They would have a guaranteed payment of interest upon them, just as the government, by the way, guarantees all bank accounts at present. There is no greater exposure or risk to government as a consequence of this. But the interest rate must be a good one. It must be better, frankly, than what's being offered in national savings and investments at the moment. And we know full well that people would pour into these accounts, if anything, well, at the moment, something like 1%, maybe even a little less. If that was offered on these accounts and there was a guarantee, literally money would pour into these accounts in a way that they could then provide the capital to keep these investments going. In fact, by itself, that would be enough to provide more money than we could probably spend at present. But once we get the idea into our heads that this is a pool of capital which needs to be spent, we could do further things. So we have suggested, for example, that in exchange for the tax relief on pension contributions, a quarter of all new pension contributions should be invested in some form of green investment activity that will create jobs in the UK for the benefit of the UK economy. And post-Brexit, this is entirely possible. So what does that mean? That would deliver at least another £25 billion of funds a year. Put those two numbers together and around 100 billion, near enough. I mean, let's not get too worried about the details at this moment, but something like £100 billion a year could be available to inject into the UK economy to start its transformation, to build the type of future we need. And by releasing this spending from the conventional government budget, that conventional government budget could then be reallocated into the types of revenue spending that we also need, which is the training for people to work in these new hospitals, the training for the people to actually work on these projects, the new care workers we need, the new educators we need, whether they be teachers or teaching assistants or whatever, or indeed even support at university. All of those things could be funded as well because the demand for money to fund capital would have been released by this new National Investment Bank, which is taking money which has been put on deposit to date or speculated in the stock exchange to date by those people who've got money as a result of QE, and in that situation literally gone to waste in economic terms because the money that goes into the stock exchange does not create new jobs. It's simply the purchase of second-hand investments that were already in issue. The companies themselves don't benefit from it. And money in bank accounts is unproductive. It does not result in new lending or new investment. So what we're trying to do is break this logjam in the economy where money that is saved does not become money that is invested. The Green QE programme overcomes that by redirecting money from savings into active use to stimulate the economy and at the same time to create an enormously valuable relationship between savers and the real economy, which is effectively intergenerational. Because older people, people like me, are savers, because we're towards the end of our working lives, whereas young people need investment to provide the foundation for their future. So this programme is also about transferring wealth from savers to younger people through programmes of investment to really show our signs of, well, absolute confidence in the future we can have. The Green QE programme is fundamentally different in this way from the QE programme, and it is the QE that we need in the future to build the prosperity we need. I'm going to do some more discussion on this and why it could work very soon, but I hope that this helps you understand what I want to achieve through this idea. Thanks for watching. If you're interested in what I've been saying in this video, please subscribe. There is a button below the viewing screen. If you're interested in what I have to say on Twitter, I'm at Richard J. Murphy on that medium. If you want to look at my blog, that's taxresearch.org.uk. And we have a Facebook page as well, Richard J. Murphy. So one of those things will get you more information on what this video series is about, and I hope I'll see you again soon.